What's up, traders, and good evening. It's time to do the weekly levels. Going to look at the major levels coming up, going to be important this week on the instruments that I'm looking to trade and follow: cryptocurrency, stocks, gold, commodities, the VIX, all the things I think are going to be important coming into this week. We're going to start with Bitcoin here because earlier today I put out a video that was prompted by the sentiment this weekend. The sentiment this weekend seems to be of fear. I think a lot of people in Bitcoin were looking for this to be the bounce to go on and retest the high, break it, whatever they were looking for. And I don't blame them. One things I've been talking about for all these weekly videos is that price did in fact come to this 36,000 support right here, which was the retracement from the COVID low up to the all-time high. And that is where we got this relief rally. I was expecting some sort of relief rally off of this point, and that is what we have been in. So the question now is, was it a good idea for everyone to start jumping in long, trying to play it for fear of FOMO? Well, if we take a look at the daily time frame, the thing I've been saying for many weeks now is I'm waiting for price to clear out of the daily Ichimoku cloud. That has been a very, very good system going back 10 years. I have another video that I put out about that, where if you do a search for the best strategy for Ichimoku, the best numbers for Ichimoku, I talk about that. And the waiting for price to get outside the cloud at the same time that your momentum or lagging span gets out, that is your confirmation for bullish. And so we started making our way up there on this relief rally, but a couple things happen. Number one, you have a lower high on this move up. Just a simple technical thing. Not going to trade it, but it's something to note. And number two, you're also holding the 50% of this move down right here from the liquidation spike down, and that's where we held. You can see that a little more visually if you look at the weekly. It's holding that Tinkinson right there. That red line, by the way, that's just my Ichimoku lines. That's Tinkinson. So it's telling us that it found a resistance and it held. I do believe that, like a lot of things, we're going to see a retest of the low. I'm always going to start with a retest. That means it's going to make its way to it. We'll see what it does there. So I would come into this week bearish on crypto, or Bitcoin in particular. Ethereum, it, as we talked about last week, came down to this resistance level right here, held it first, and then it also made a lower high. It actually has the same sort of pattern, and I would not say this is bullish until we get on this side of the cloud. And now we're going down again for a retest of the low. So that is where we stand right now on crypto for now. So by next week, we may have an answer of where we are. If we came to this low and held it, or if in the week following we break it, or we could bounce. We'll see. But for now, right now, I think we're going to see a little bit of a bearish week. And that comes in line with the stock market, which we're going to talk about here in a second. One thing I've been looking at in this video is the Bitcoin dominance chart. Now, of course, we're going to look at the Bitcoin dominance chart to know if we're going to have an alt season. That's what a lot of people are hoping for. They want their altcoins to pump. Well, in periods of bearishness with cryptocurrency, you will see Bitcoin lead. It is sort of the safe haven asset that a lot of people go to. At least that seems to be what the phenomenon at work is. And so this has gotten on the bullish side of the cloud. The market cap dominance of Bitcoin is trending up. So I do not see the signs of a altcoin rally at this point. In fact, we've already rolled over the next day. Everything's up from 7 p.m. Eastern here. but a lot of the other cryptocurrencies, Litecoin, Cardano, um, Monero, they're all showing basically the same pattern. Lower high on this relief rally, and they are trying to retest their lows. And one thing I've tried to encourage people to do is look at some of these cross pairs. If you don't want to sell your cryptocurrency, find yourself an exchange where you can hedge your existing exposure using these crosses. Take advantage of the fact that we can recognize Bitcoin is beginning to lead a lot of these cryptocurrencies and create yourself a hedge. Hashtag not financial advice, but it can help you out if you don't want to close out your bags, but you want to preserve the value, fiat relative value, that is. So let's take a look now at stocks. Yeah, we'll do that first. We're going to use the S&P futures. Let's clean this chart up a little bit and start over. So one of the key things I've watched for the last few weeks, and last week's video, I'm pretty sure I noted it, that I've been watching this correction, and that's what I assumed that it was, a minus 10% give or take correction that we get once every other year. But I can't deny that 2 times we held the 50% resistance of this correction. And of course, last week, we definitely stayed below it. So just like crypto, because for some reason now they're correlated, I also am looking for this week to retest the bottom. As a quick note, this is going to be a short week. Monday is President's Day. Market is not open. So really things will start kicking off Tuesday, and we'll see what happens. It's an interesting start to the week. There's been a lot of FUD about Russia invading Ukraine. Let's address that. Isn't it interesting that right as people stopped caring about COVID, we have a new crisis? And this is what everyone's talking about. When I try to point that out to people, that maybe this is just FUD, maybe this is just blah, 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 they take it very seriously, just like people took COVID very, very seriously. And I don't blame them. I mean, war is scary, viruses are scary, and human beings are heavily attuned to fear. Well, if you're going to be a contrarian, if you're going to go against the herd, you have to have a little bit more of a higher resolve against all that fear. There's nothing you can do about Biden and Putin. And all this news and all this worrying about, if we evade, the market's going to go down, blah, 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 blah. There's a key thing that we need to really think about here. And I believe I've talked about this in my live streams, but let's go back and look really quick at what the past few weeks have given us. Back on Thursday, what was it? Thursday week, you had those CPI numbers. And within those CPI numbers, we were apparently having higher than expected inflation. Okay. That afternoon, one of the Fed governors got on and stated his opinion that he thought that the interest rate for this year should be 1%, not 0.25% like they're going to raise in March. And that brought things down more. And then here on Friday a week ago, right before the close, U.S. officials said that Russia was planning to invade the Ukraine. And so over the course of the beginning of the week, it recovered from that Ukraine news. And then what happened again? Friday, right before the close, more Russia. I don't believe in conspiracy theories, but man, how convenient is that? And then what'll happen is you'll see these news articles that they need to write these stories to fill the content. And they'll talk about how market down on Russia invasion fears. If you're sitting here actually trading, if you're actually paying attention to the market, you'll know that when that was announced, that maybe Russia was going to do some stuff. The market was already in a bearish trend. Now, let's think back a little bit to 2020 and 2021. This big rally in here. Think back. Think back really, really hard. I want you to really try here. How much FUD, fear, uncertainty, of doubt, was in this time period? How many news articles did you read about COVID deaths, about infection rates, about new variants? Do you remember the Delta variant? I think the Delta variant was in June. Yeah. I think the Delta variant was right here. June of 2021 is when that came about. I could be wrong. It's one of these dips. It's one of these little bitty dips right here. One of these little bitty predictable minus, that's not even 5%, but typical dips that you have. And then what did the market do from there? Rallied. Bull market, don't care. Earnings could be bad in 2020 and 2021. A lot of them were, but the stock continued to go up. Bull market, don't care. And that was something I said over the last 2 years. Bull market, don't care. It didn't matter what news was coming out. It didn't matter what uh, bad things were happening around the world. A bull market discounts all bad news. Now, that being said, let's flip things around. Every time some bad news comes about, now, what does the market do? It goes down. The market cares about bad news now. So if a bull market doesn't care about bad news, what kind of market are we in that does care about bad news? Not bull market. I got to admit that. I'm seeing things hold resistances. I am noticing the sentiment is distinctly not bullish in that it discounts bad news. And so I'm trying to keep muted here because I don't want to be one of those people putting out FUD, but I am seeing less bullishness. Don't think we're in a bear market just yet. But if we do come down to break that correction level, then we have a different conversation. And I'll definitely be talking about it. The VIX, speaking of fear, the VIX index, the fear index, it's not really giving me much to go on. I've been watching this thing, trying to make sense of this vixen for several weeks now. We had a close below, and that implied to me that, okay, that was it. Now we're going up. But then this vixen decided to get back above the key level 26. 26 is what I've been watching because it's basically the halfway point of the major moves in the VIX. This is the line in the sand. Well, see, we're still just hanging around between 26 and 28. Where we break, that'll give us some kind of indication. But right now, it's being a secretive fixin'. Oil, which I've definitely been watching. We were in a trade last week that we closed. It looks like it's finally going to undergo a pullback. It's interesting. This open today came up and held a 50% level, but we've been watching this all the past week, and it has a very interesting personality. Very, very interesting personality. All over the place it goes. We were able to pick up along here, able to kind of hold it through this, and then finally I closed mine out on the big leg down there. It's just not topping out, and you even have this little false breakout right here, which I like to see. So there you go. I still think that oil is inevitably getting to $100 a barrel, but with this kind of bullish run that we've seen, we're basically going to try to come back to the level I remember oil being. This is when the producers begin to turn on and produce supply at their break evens or profitable levels. But before we get there, we'll probably end up seeing a pullback. So I'm going to be watching this pullback develop. we're kind of caught in between the two here. We could do a pullback all the way to the cloud, come back into the mid 80s range. And we'll see if that happens over the next several weeks. So, gold is another thing I know a lot of people have been talking about. I don't know. I'm not really a big fan of gold, but I know that people are. People are trying to get this thing to break out. They're trying to jump it here, expecting it to break out to what level? I guess the 3000s or something like that. I don't know. But again, gold has this habit. It has this history, this long history of doing these periods, long periods, half decades even, of just very boring consolidation before making a move. And then sometimes, of course, it does its consolidating move. And yes, it does break up. But the last time it did a pattern like this, where it was rather boring, it ended up going on a down move. And another time when it was boring, it did this. Now, which one of these types of breakouts is like the other? Is the break up pattern looking like this one right here? Or is the break pattern looking like this one back here? Could go either way. We'll see. But again, I'm not particularly interested in gold. There's other stuff out there that offers a better rate of return, I think. But I know people love gold. It's got a long history. The stocks I'm going to be looking for that are going to really dominate the market, of course, going to be Apple. And I've been watching Apple very closely on its pattern here on the daily. And the Apple's basically the S&P. It's just so dominant. And so you have to pay attention to it. So it's still holding, hanging out here, but we're approaching a line in the sand level. It needs to hold this rally here. So 165 is going to be a key level for Apple to hold. And that's going to be something I'm watching this week as well. Nvidia is trying to hold its ground in this level right here, but I'm starting to get a little nervous about Nvidia. I already went ahead and cut out my Tesla. We'll see what happens here, but this break below and then getting below the resistance right there, stock that I don't want to be in a not bullish market. So that's the levels this week. I want you all to trade wisely. Enjoy tomorrow if you want to take it off because the market is closed. And we'll see you in our next videos.